Why 20%?
That's just again, it's just a common theme. It puts you basically you get out of and again, Pete, you know better than I.
Yeah.
That was it PMI, which is
Mortgage insurance. Yeah.
mortgage insurance, which
Yeah.
will save you. Your payments will be lower.
Yeah.
Even if you have high interest rates, it's
Yeah.
not going to seem like, hey, I'm paying an arm and a leg.
Yeah.
On this.
Yeah.
So you avoid PMI, and then you at least build some equity quicker in that. You already have put in that 20%.
I love it. I definitely love that kind of added strategy or recommendation. I do like it. There's a lot of buyers that still think they have to put the 20% down, that they have to be able to save that 20%. And I fall on more of the affordability. In other words, if you don't have 20% down, I still think it's a great way to build wealth, a great way to be able to get into your home, as long as it fits within their budget.
Correct.
And as long as they can afford it. Because the mortgage insurance, I have a whole training on mortgage insurance of how that works, but I don't know. Have I ever told you mortgage insurance, how it was created?
No.
So mortgage insurance, before the 1920s, before the 1930s, the Great Depression, there was no such thing as a first-time home buyer. There's no such thing as 5% down. Anyone that bought a house, they had to put 20% down. The banks wouldn't lend to anyone unless you put 20% down. So this is the way it was before the 1930s.